What are the best companies for infinite banking? Let's just dive in because I've got a few that I recommend while there's others I don't. Okay, so what are the best companies to use for infinite banking? Now, this is not just for life insurance companies. There's lots of great insurance companies, but what are the best ones that I've used personally or I've had clients use because they do offer some of the best benefits for infinite banking? I'll tell you, here's a few companies I'm going to recommend, but I'm going to tell you it's not just about the company. So be sure to hang in to the end to understand why. All right, so what are the best companies used for infinite banking, right? Now, there are a lot of opinions out there. I know there's a lot of companies. In general, here's what you're gonna hear, especially if you're in the United States. A little bit different in Canada, but if you're in the United States, you're gonna hear that the best companies to use for infinite banking are typically, and this is even in general, are typically mutual companies. Companies that often will have mutual on the end of it, right? You hear about Northwestern Mutual, New York Life is a mutual company, even though it doesn't say mutual on the end, right? So these companies actually are mutual companies. Now, why do insurance agents always recommend these mutual companies? Here's a few reasons. It's not just about infinite banking. It's about the fact that mutual companies are kind of like credit unions. So like there's a difference between banks and credit unions, and often credit unions will offer you a little bit higher return because rather than paying their profits from the bank, banks pay profits to their shareholders, credit unions pay the profits back to their members, right? Which could be you if you're someone who has a bank account with them. So often you'll see credit unions will offer the best interest. Same thing with mutual companies in life insurance. Mutual companies are very much the same way where they don't have shareholders, they don't have stockholders. You, as the owner of the policy, especially if you have a whole life policy, you are the benefactor. You are the one that receives, actually part of your dividend is literally profits from the insurance company. So as long as the insurance company is profitable, you also profit from it as well. And so that's one of the biggest reasons why mutual companies tend to be best. But now, which mutual companies should you be using? So this means that your typical MetLife, State Farm, we're probably not going to use these as much, even though some of those are mutual companies. But MetLife is not. MetLife, you can see it's on the stock market. They pay to their investors. Now, here's the other thing, is that a lot of companies, even if they're mutual, things like State Farm, for example, it doesn't mean they also always have the best policies. Many companies will focus on a certain area. They'd like to have their niche, right? They like to know where their focus is. State Farm, for example, and again, I'm not poo-pooing all over State Farm, but State Farm would be much better suited because they put a lot more emphasis into their auto and homeowners insurance and liability insurance. Those they call it property and casualty insurance. They put a big focus there. So they don't put as much focus on the life insurance side. Now they love it if the agents offer the life insurance side, but I've had many State Farm agents come to me and saying, listen, what you're showing and what I can offer at best is not even competition. Like, it's disgusting how much better your stuff is than ours. That's why, right? So, and remember too, many agents, when they have their perspectives, many times they're what are called captive insurance agents too, where they can only work with that company. They're not independently brokered to work with other companies. So beware of those that are working with captive type of agency contracts and things like that. I've actually watched people that normally have very good reputations, very credible, good-hearted, kind people, insurance agents specifically, that will send a client to a certain company, not because it's what's best for them, but because they have to hit their minimums that they have to, for production to be able to keep getting benefits from that company. So just be aware that it's not just about the insurance company. It could be a great company, but it's more about the agent. Now, I'm going to come back to some more of that here in a bit. Let's go back to these companies too. Now, many companies are popular. I think one of the best ways to look for good, solid companies based on stability is you look up what's called the Comdex score, C-O-M-D-E-X. Comdex takes all their financials and everything, their ratings, and puts it into one, and usually it's a scale from 0 to 100. Now, you'll see companies on there like Northwestern Mutual, New York Life, way up at the top, right? In fact, I just had a client, in fact, she put a comment on a YouTube video here recently on our channel here, and she said, I was going with Northwestern Mutual before I met you guys. And the reason I didn't is because it was so much more expensive, like thousands of dollars that they're going to spend more in fees, insurance costs. That's one of the reasons why Northwestern Mutual is so strong. They charge more in fees. So even though they're a good, solid, strong company, it may not be the best to use, especially if you're trying to build up that cash value, that tax-free savings account to have more growth, which is what infinite banking utilizes, right? They utilize that, not so much the death benefit. They're using the cash value. And so Northwestern Mutual, although it's an amazing company, it's going to be expensive. And I told her too, even before she went back, I said, just so you know, their only argument is going to be, we're really big. We got a lot of, we got a lot of money. We're highly rated, one of the top rated in the industry, which is true. They are, but they're not the best. One that's not far down the list from them or really similar is MassMutual. MassMutual is one of my favorite companies. I would say it's my second favorite company. That's another strong company, especially if I get clients in New York. We'll often use MassMutual because they're one of the few companies allowed to do business in New York. It's not that these companies aren't good, that aren't doing business there. New York's almost like its own country, right? They got their own laws and their own stuff. And some companies just don't want to go through the hassle of trying to become New York approved. So they just ignore New York and go with the other 49 states and DC as well. So just be aware of that. So MassMutual is another great company. There's Guardian, there's Lafayette. That's also high on the list as well. You'll see those are companies that I've used from time to time. The one I've used the most is Penn Mutual. The reason I use Penn Mutual, and they're still pretty high up on the Comdex score. They're in the low 90s there. Just so you know, Comdex score, anything that's generally at least mid 80s and above is usually pretty good. I mean, 80s in general is pretty good. If you're below 80, you're not a very solid company. But I like to stay at least right around the upper 80s and above if I'm going to use an insurance company. And there's other companies I've used too. I'm just mentioning a few. But Penn Mutual is the one I've used the most. Now, here's the thing. I'm coming back to it's not about the company as much as it is about the agent. Because the reason that I like Penn Mutual the most is because they give me the most flexibility to alter and reduce the insurance costs. I mean, one, even for term insurance, they're one of the cheaper ones out there anyways. But two, the one thing that people will try to sell you on is if it's not about the big company, they'll try to sell you on the dividend too. And I'll tell you something. I worked with one company before that was a mutual company that they had a dividend rate of 1%. Yet, despite that 1% dividend beat the others that were paying 6 or 7% at the time. Now you might be thinking, wait a minute, how does something that pays you 1% interest beat somebody else that's paying like 6 or 7? It's very simple. If an insurance company can reduce its cost by 10% compared to their competitors, you would have to earn a 10% return on top of that 6%, right? Like, so even if it's 1%, but you're 10% cheaper, that's like getting 11% return versus the 6 or 7% that those other ones were paying. And so that's how it was able to win, because it had lower insurance costs. So when I look to design a policy, and I know our team does the same thing, we're trying to figure out which ones will allow us to manipulate and lower the cost as much as we can while keeping it tax-free, but then allow your cash to grow faster. And that's why I use Penn Mutual. They give me more flexibility. They don't spend as much in cost. They're not sponsoring huge football games that you see out there advertised and things like that. They actually use their money. And in fact, even commissions-wise, I'll tell you commission-wise, they're not the most impressive. I have seen people out there, agents out there, that will promote certain companies like One America or Lafayette or things like that, or even MassMutual from time to time, because they pay more. And they're like, well, this one pays me X% more, so I'm going to pitch this company. And it's not that that's not a good company, but it's because the company doesn't allow you to cut the costs. And guess what? Those costs still get passed on to you because those commissions are still coming out of your pocket because they're paid off of the insurance costs that are coming out of the policy. So that's how those insurance companies can afford to pay those kind of commissions. They'll bump it up more. Now, I'm not against being paid commissions, but all things being equal, what's going to give you the best value is what's really important. So this is why, again, I've used Penn Mutual. And even when they've had a little bit slightly lower dividend, they're like 6% right now. They're still up there with everybody else. But there's others that are now looking in 2025 paying almost 6.5%. But still, it kicks the crap out of all those other guys because of the lower costs. That is the key. And so it's not just about finding the right insurance company, although there's great ones for infinite banking. But it's also about which ones allow me to lower the cost as much as possible so my cash grows faster too. That's why we call our design Max ROI Infinite Banking, right? We're not the infinite banking concept. We're not IBC. We're not like Nelson Nash Institute. We have our own version that we use to try to lessen those costs so you can maximize your returns. And what I love so much too is that, again, it's not about the insurance company as much. I mean, there are insurance companies that do encourage it more than others. Some have actually, like MassMutual even came out publicly saying they hate infinite banking, so to speak, right? But they still allow it. That's the thing. They have to publicly eschew it, but they're usually poo-pooing on the bill pay version of infinite banking, where it's like, hey, I'm going to use this money and move the money in and out all the time to pay for monthly bills. Don't do that kind of stuff. That's not the kind of infinite banking I approve of. That's why ours is different. Ours is more using it for business or investments and for savings, and that's pretty much it. And maybe retirement income down the road. That's our focus. So just remember, it's not. The insurance companies do help, and you do want to have a good, highly rated insurance company, so look for the Comdex score. Also look for ways to find those mutual companies that actually do it well and actually support that kind of strategy with infinite banking, but most importantly, it's the ones that allow the most flexibility and finding the agent who's actually willing to do it. And so if you guys want to learn more about how does that actually work, what do those numbers look like even in your situation, I would go to moneyripples.com, click on the infinite banking section, and you can actually book a call with an agent to find out what does this actually look like for me. And by the way, we can even show you multiple companies to show you the difference too. So be sure to do that today.